All right, good afternoon, everybody. How are we doing today? If I can get a quick audio and video check here, let me know we're coming through okay. Hey, Cheryl, how you doing? Hey, Mark and Ed, everybody. Good to have you. Hope everybody had a great weekend and a good trading day so far today, and looking forward to a great trading week. And just a reminder to all of you out there, next Sunday is Mother's Day. I got reminded of that this morning, got it on my list, so quick reminder to everybody there. Hey, Ron, thank you very much for that. I appreciate that. Ron's coming to us from Fort Worth, Texas. Ron, I'm down in San Antonio, Texas myself, not too far away from you. All right, well, good. So we're coming through loud and clear. Let's get things up and going today here. We got a lot to cover. Let me get our recording going. So welcome everybody to the Nadex Application and Strategy webinar series. My name is John Skelton. I'm with apexinvesting.com, and this webinar here is brought to you today by Nadex. And what we're going to talk about today is kind of a two-part series. We're going to have part one today, and then next week, part two. We're going to talk a little bit about the difference between short-term and long-term Nadex binaries. And I know I talk to a lot of people that, you know, say, hey, I've got a pretty decent comprehension of what a binary is. And, you know, a lot of you have been on my webinars where, okay, hey, we understand what a binary is and how it works. And, you know, then we've gone through and talked about the strike ladders and the different strikes to choose from and how they move in value. And if you've missed some of those presentations, I'm going to show you here in a moment where to find those webinar recordings. And some of you have a really good handle on that, but you know, you're like, you know, I'm doing a lot better than I used to now that I have a good understanding of that, but I'm still having a few problems. And one thing that might be an issue there is, you know, we talk a lot about, hey, one issue might be that you're choosing the wrong binary. You know, you're choosing an out of the money binary when you should be choosing an in the money or an out the money. So there's one of the keys is choosing the right binary strike. But then also another key is choosing the right expiration, short-term versus long-term. So we're kind of adding those two pieces in this week and next week to kind of help complete the whole picture here. So let's get our disclosures knocked out so we can jump right into this. Trading futures options or any financial instrument involves risk, may not be suitable for every investor. Also, please keep in mind this presentation is for educational and informational purposes only. And any examples that you see me used here are strictly me just showing you how to use the Nadex platform, how to use the order tickets, how to enter and exit orders on the platform. It's just simply educational, showing you how to use the system. It's in no way a trade recommendation or a trading type signal. It's not a recommendation to buy or sell or solicitation to buy or sell any particular financial instrument offered by Nadex, whether it be binaries or spreads, or a recommendation to sell futures, options, bonds of any type, just for educational and informational purposes only. Any trading decision is your sole responsibility. So, for those of you that are brand new and not that familiar with Nadex, or even those of you that are and already have a live account, just want to direct you over to the Nadex site. If you go over to the Nadex website here, a couple things I want to point out real quick. Right here under trading platforms, you know, some of you may be familiar with the online Nadex platform. They also do have a mobile app, which is really great for on the go. But right here, demo trading platform. What I really want to focus on with you today, or this part here, is taking advantage of all the free resources that Nadex offers you. Nadex will give you a free demo account with $25,000 of practice money in it. All you got to do is select a username, fill out some quick info, and hit open demo account. All right, and in just a few moments, you'll get an email from Nadex with a temporary password. You can log right in and get right into the Nadex demo account. From there, you can go right up here to My Account. Okay, go to My Account. You can go right here to Settings, and then right here to Password, and that will let you change the temporary password to whatever you'd like it to be. That way it's easy for you to remember. But it's a $25,000 practice account. It really helps you to get familiar with the Nadex platform, familiar with the different expirations, how to enter and exit orders. It's a great place to, you know, practice any new strategies, any new systems, do them in your demo account, all right? Perfect them in your demo account, learn in your demo account. Don't use your live money and lose your live money practicing a system. Utilize the demo account for anything new that you're testing out and checking out. Once you get it mastered in demo, you're being profitable in demo, then you can move over to your live account and start utilizing it there. But I can tell you, I've been trading, Nadex now for almost 4 years, and I use my demo account almost every single day, testing new things, trying out new things, mastering new things. It's a tool that is just an absolute must. So if you don't have a demo account yet, hop on and get one. Even if you already have a live account with Nadex, hop on and get a demo account. Great place to be able to practice anything new that you are looking to add on to into your trading playbook there. Also here on the Nadex site, this webinar we're on right now is being recorded, and past webinars are recorded. If you go right here to Learning Center, this is very important, especially for those of you that haven't been with us. Right here under webinars, this will show you the list of upcoming webinars. Okay, what's coming up in the future? That way you know what webinars are coming up. You can get registered for it, get reminders of it. Make sure you see what subjects are coming up that you want to be on. Right here under Webinar Archive, if you click that, these are all the past webinars. And if you're right here, it says Filter by Presenter. If you click this drop-down box and find us right here, Apex Investing Institute, this will show you all the past webinars that I've done here. And for those of you that have missed out the last few weeks, if you've missed some of this, I think it's a really great idea that you go back and catch up, because we've done a lot of good webinars recently on breaking down the price of a binary. How is a binary priced? How does the value of a binary change? How can you utilize the Nadex strike ladder to understand with a certain move of the market, what will that do to the price of my binary? It really helps with profit targets and expected move targets, and talked a lot also about top mistakes that binary traders make. Just some really great information here for you that I think really we kind of started fresh and built a foundation in, like I said, today and next week's webinar, kind of adding to that. So if you missed any of that, definitely catch up on those. It will really open your eyes to kind of the inner workings of how binaries work. Now, some of you are saying, hey, that sounds great, but that sounds really over my head. I'm brand new. I'm still trying to understand what a binary is. Well, if you go to page 2 here and you scroll down, again, there's a ton of webinars you can watch. But if you're brand new, you need to start right here, okay? Basics of Nadex spreads and Nadex binaries 101. In a nutshell, Nadex offers 2 different products. They offer spreads and binaries, okay? And if you're brand new, each of these webinars here, this is kind of, hey, let me treat you like a 5-year-old, hold you by the hand and walk you through this. Here's a binary, here's what it is, here's what it means, here's how it works. Binaries and spreads 101. So if you're brand new, start right there. That's your foundation, the basics. And then from there, once you have an understanding of the basics, what they are and how they work, from there, you can go through these other webinars like, okay, now I've watched Binaries 101. Now I understand what they are and how they work in general. But then how do I use them? Well, maybe I should watch this webinar, Choosing the Right Binary. Because I know what they are. There's a ton of them out there to choose from. Maybe I should watch a webinar about how to choose the right one. Okay, and then from there, it's like, all right, there's some nighttime and part-time trading binaries. There's some, misconceptions. There's different strategies, ways to actually use those. And then you can just kind of build from there. And all of this is free education, free resources for you. So definitely take advantage of those that Nadex offers you there. Okay. Like I said, my name is John Skelton. I'm not with Nadex. I'm with apexinvesting.com. We're an education partner with Nadex. Nadex has us do these webinars for them, again, to just offer you free education and information. Who is Nadex? What is Nadex? How can you trade it? Kind of share with you some different ways that we trade it, and just give you some free resources and education ideas of how you can utilize the Nadex products. But Apex, we're an online community of traders helping traders. We're an education company. We've got over 20,000 members. We've got different strategies and systems and indicators. We focus a lot on risk management and probability trading. That's why we love the capped risk products with Nadex. We're traders just like you. I trade Nadex binaries and spreads all the time. And like I said, we're an education partner. We do these webinars for Nadex. I've been with Apex now for about 3 years as head of operations. I've got a background in as a stockbroker and in the banking industry. And again, I'm a trader just like you. So that's what I'm here for, just to give you some ideas, help answer some questions, and give you some good direction on where to go. So again, if you haven't been with us and you need to go back through those webinar archives there to kind of catch up and build the foundation, you should definitely do that. Today, we're adding on to that, and like I said, what we're going to talk about is short-term versus long-term Nadex binaries. We're going to talk about the pros and cons of each one, kind of based on what your strategy is, and we'll talk a little bit about how the value of a binary is affected by expiration. And we're going to kind of compare your different options that are out there, risk and reward. So again, kind of a two-part series, so make sure to take good notes here and to definitely be with us next time as well. Kind of already gone over with you where to find the basics. We're not going to go through and cover the basics of binaries today. I showed you where you can go back and get all of that information there. So what can you trade with Nadex binary options, whether it's short-term or long-term? Well, you can trade stock index futures, spot forex, commodity futures, economic events. Let's kind of go over the platform here. Let's kind of talk about some expirations, okay? Let's do a little bit of basics reviews here on what you can trade. So if we hop on over to the Nadex demo platform here, you kind of see right here, you've got indice binaries, indice spreads. Well, what is that? Well, these are stock indices, okay? Down here, these bottom four, US Tech 100, US 500, small cap, Wall Street. Those are the four major US indices, all right? You've got the NASDAQ, the S&P, the Russell, and the Dow, okay? You've also got international indices here, China 50, the London FTSE, the German DAX, and, the Nikkei, all right? So you've got different stock indices there that you can trade, derivative binaries on. For example, if we open the Wall Street 30, that is the Dow. As of right now, what are our options here? Well, right now we've got binary options that opened at 12 p.m. and they expire at 2 p.m. So we've got those two-hour binaries there. Got some others that opened at 1 p.m. and they expire at 3 p.m. So these are 2-hour binaries. Here at 2 o'clock, as soon as 2 p.m. rolls around, these right here will be gone. The 12 to 2s will have expired, and then now there will be a 2 to 4 that's in there. Okay, so you have the intraday binaries, the 2-hour binaries throughout the day. We also have dailies that expire at 4:15 p.m. We can trade the end of days. And we have weeklies that expire on Friday. Okay, so we've got a lot of options. We've got short term, meaning within the next hour, within the next 2 hours. We've got a little bit longer term. We can do end of day here, end of the day, and we've got weekly all the way through the end of the week. So no matter what our strategy or system is, and by the way, there's also 20-minute binaries, okay, on the 4 U.S. indices, including the Dow. So we've got right now, it's 1:12 p.m. Eastern time. I've got binaries that expire in, 8 minutes. And then after that, I'll have another one that expires at 1:40. I've got binaries expire in, 48 minutes. I've got binaries expire in an hour and 48 minutes. I've got binaries end of day and end of the week. I've got all kind of options here. Whether I've got a short-term strategy or a longer-term strategy that I'm using, I've got different options, okay? So there's a ton of great options there with Nadex. On commodities, all right? What's a commodity? Well, I always like to say a commodity is something you can actually hold in your hand and drop on your foot, right? It's not just a paper. It's not just a stock certificate, like with the stock. It's something you hold in your hand. Copper, corn, oil, gold, natural gas, soybeans, silver, commodities, all right? And even there, like for example, we open crude oil, okay? Again, throughout the day, you've got your 2-hour binaries, you've got the dailies, and you've got the weeklies, okay? There's not 20-minute binaries offered on commodities, so they're only offered on the 4 U.S. stock indices, okay? But again, we've got shorter term, end of day, and weekly. Now with forex, see here you've got forex spreads and forex binaries. Forex, you've got a lot of options. For example, let's open the euro dollar, one of the most commonly traded, forex pairs out there. But you've got 2-hour binaries. All right, same thing here, 12 to 2, 1 to 3. We also do have the weekly, end of the week binaries. But you also have different daily binaries with forex, okay, throughout the day and throughout the night. So like right now, again, it's about 1:14. I've got binaries that expire at 2 p.m. and at 3 p.m. Or I've got, check these out. I've got 3 a.m., 7 a.m., 11 a.m. I've got 3 p.m. today, 7 p.m. tonight, 11 p.m. tonight. I've got all kind of options here, okay? And I have the end of the week, okay? So again, whether I'm looking short-term, long-term, if I want something into the week, if I want something into the day today, or maybe I want something this evening, or maybe I'm looking like, longer term till tonight, 11 p.m., or if I want something tomorrow morning, that could be affected by the London Open and the European Open. I've got 3 a.m.s, I've got 7 a.m.s, I've got 11 a.m., all kind of options here, okay? And I think a lot of people, especially newbies, kind of forget this. They're so focused on the next expiration. They're so focused on what can I trade right now? I need to trade right now. What's going to expire soon? Also with certain forex pairs, if we come down here, we've got 5-minute binaries. These are offered on excuse me, on different forex pairs. 5-minute binaries are for forex. They're not on, the stock indices and commodities or anything like that right now. But these expire every 5 minutes. Okay, so you've got, you don't have expirations right at the top of the hour, but you've got 11 different expirations an hour, 5 different strikes. So right now I've got binaries that expire in 2 minutes and 47 seconds. And, so these are going to expire at 1:20. And then at 1:20, there's going to be a whole new set that expire at 1:25. And then there'll be a whole new set that expire at 1:30. So no matter what my strategy or system is, if I'm a very, very short-term trader and I'm using a very short-term chart, and I'm looking for the immediate trend direction of the market. What is the market doing right now, right this second? Where's the volume and the momentum of the market going in the next 2 minutes or in the next 5 minutes, right? I'm a fast-paced, heart racing, like love the adrenaline kind of trader, right? Like I'm going with the market. What is it doing right now, right this second? Well, if that's what I'm trading, if I'm using very short-term, short tick, looking for the immediate heartbeat of the market, where is it going right now? Where's the volume pushing right now? Where do I think it's going to be the next few minutes? Well, if that's the type of trader I am, and that's the chart I have, and that's the indicators I'm using, and that's the strategy and system I'm using for the immediate right now heartbeat direction of the market, where will it go in the next few minutes? Do you think I really want to be trading end of the week binaries that don't expire for 4 days? Does that make any sense at all? Do I even want to be do I really even want to be looking at something that's not going to expire for an hour and 40 minutes? If I'm a trader looking for the next few minutes of direction of the market, those binaries probably aren't the right ones for me, are they? But the 5-minute binaries, those might be perfect for me, right? So I not only have to understand the basics of a binary, I not only have to understand, how the strike ladder works with all these different strikes. I not only need to understand what's the difference between a, very cheap out of the money binary compared to a more, pricier binary that's in the money. I not only need to understand how binaries work, how the different strikes work, and how the pricing works, but I need to make sure that my strategy and system matches the expiration that I'm choosing. For some of you, that might seem very, very elementary, but especially for you newbies, does that make sense? Does that make sense why you want to make sure that if your strategy or system is a very short-term, what's the market doing this moment, then you need to be looking for closer expiration binaries, not further out, okay? And again, might seem elementary, but it's definitely something you have to keep in mind. What about the opposite, okay? What about the opposite of that? What if I'm a longer term trader here and I'm looking at the longer overall direction of the market? Well, what do you see in a quick glance here with this chart? Well, you see the market trending up, a little pullback, trending up, a little pullback, trending up, a little pullback, trending up, a little pullback. Okay, market's in an uptrend. Okay, so does that mean you automatically just want to go in and do a 5-minute binary and buy it because the market's in an uptrend? Well, take a look. What does this chart say right here? Monthly. Each one of these bars is a month. A month. You see that? What is this chart going back to? How many years is this chart showing you? From 2010 to 2017? Okay, wait a minute. That's not good, right? What about this chart here? Well, what if this is a longer term chart? Okay, same thing. Market's pulling up, coming back, pulling, coming back. Again, this is a daily chart. Each one of these bars is a day. All right, you see that? December, January, February, March, April. Okay, if I'm a longer term trader, all right, I mean, even if I'm looking at, you know, more like an hourly chart here to see what the market's doing, I mean, that's a day, that's a day, that's a day. Okay, if I'm using something like this in longer term to see overall directions of the market, does that tell me what's going on in the next few minutes or what's going to be going on in the next 5 minutes? No, not really, right? I might be referencing these for overall trend directions and what is the market doing. But if I'm going to be trading 5-minute or 20-minute binaries, you know, I really need to be looking at, you know, smaller time frame charts. You know, maybe I want to be looking at, you know, more like a 1-minute or a 5-minute chart with all my different indicators on it. You know, what is the market doing right now? Where's the immediate direction of volume right now? You know, or maybe I want to be looking at tick charts, right? I want to be looking at smaller time frames. So you have to make sure, once again, that your strategy or system matches your expiration. Okay, I've seen so many people choose not only just the wrong binary, but the wrong expiration. And how many of you, show of hands here, how many of you said, okay, I was looking at my strategy or system, the market's, you know, that showed me that the market was going up, so I bought a binary. But then it expired 20 minutes later, and I lost. But then 30 minutes later, boom, the market went in the direction I said it was going to go. I was right. I was totally right. But it just didn't happen in enough time. It didn't happen before my binary expired. So you have to make sure that you're giving yourself enough time to be right, but not so much time that you don't get the amount of value movement. And what do I mean by that? Okay, well, let's talk about that. So I think everybody's got a good understanding now of all the different binary options that are out there for you. Everything from 5 minutes, 20 minutes, hourly, daily, and weekly. So you've got just about any possible binary option out there with Nadex to fit any of your strategies that you might be using that week. Okay, so let's take a quick peek at something here. And so we've got short term, 5-minute, 20-minute. You see a little bit longer term, you know, some intraday, daily, and weeklies. I want to show you a little something here. Okay, and again, if anybody missed some of those past webinars I did over the last couple of weeks, you really need to go back and watch them, okay? Because this next part will make a lot more sense if you've seen those binaries or those webinars, or if you really understand binaries, okay? So we talked a lot about the strike ladder, all right? And this is a, you know, a shot here of the strike ladder. All of these different strikes listed are different binary contracts, okay? And I've talked to you, you know, a few weeks ago about how to use this strike ladder to help understand price. Like right now, let's look at this one right here. This strike is 0975, okay? And you know, you can sell it for 49 or buy it for 59, right? Well, and then look at the next one down, it's 0925, okay? 0975. So these strikes are how wide are these strikes? They're 50 pips apart, right? See that? There's 50 pips difference between each one. So let's just do a quick little show of hands here and quick little quiz, see who knows this or who was on with us before. But if I were to buy this binary right here and the market went up 50 pips, what approximately could I then sell it for if the market went up 50 pips? Because if the market went up 50 pips, it's basically like moving up or down one strike, right? These strikes are 50 pips difference. So if the market went up 50 pips, okay, then you would actually just do what? Well, actually, Sharon, think about it the exact opposite. You almost had it right. If I bought this for 59, and when I buy, I'm saying the market's going up. So if I buy for 59 and the market goes up 50 ticks, 50 pips, which means it moves in my direction, which means my value should be going up, which means this binary would now be 50 pips more in the money, right? What binary right now is 50 pips more in the money? This one below it, right? Because it's 50 pips more in the money. So, which means I bought it at 59.50. If the market were to move up 50 pips, it's almost like this binary moves down, right? Because it's now 50 pips below, so it'd be 79. Yeah, Sharon, you had it. You just went this way instead of that way, right? So does that make sense? How you can see on the strike ladder, okay, when it moves up, you know, the same amount as the difference in the strikes would be this value now kind of becomes this value. Now, if I bought it, Sharon, and it went down 50 pips, then yeah, it'd be worth more what this strike is worth now, right? Okay, so we understand that, you know, you can utilize the strike ladder to see how the pricing works. If you understand the basics of a binary, at expiration, a binary is either worth 0 or 100, right? And as the market moves, you know, in your direction or, you know, for you or against you, your value of the binary moves towards 0 or towards 100, right? Or the closer you get towards expiration, the closer it gets to the expiration, the quicker it's got to get to a value of 0 or 100, right? Everybody understands that part, those basics? So let's take a look at something here. Look at this screenshot. This is a weekly binary, okay? I took this screenshot last week when I put these slides together. And I think I took this screenshot on a Thursday night. So as you see here, there's 20 hours and 25 minutes to expiration, because this would have been the Friday at 3 o'clock expiration. So with 20 hours, almost a whole day to go, this strike of 975, you can buy it for 59, sell it for 49. Okay, got it? So look at this strike, 975. Look at this strike, 974. Very close, right? One little measly pip off. But these screenshots were taken at the same exact time, by the way. But this one only has an hour and 24 minutes to expiration. This one, 20 hours. 975 compared to 974. Basically the same strike, right? I can buy for 59, sell for 49 with 20 hours to go. But with an hour to go, what is it? Buy for 95, sell for 87. Whoa, That's a big difference, right? And where was the indicative at right here? 98.18 compared to 98.17. See, I told you I took these screenshots like one after the other. You see the big difference there, okay? Yes, that is the time value premium, because where's the market at? The market's at 98.18, right? So what is this binary strike saying? What is this binary contract saying? Saying that the euro dollar will expire greater than 974, right, at 8 p.m. So the contract says it'll be greater than 974. Well, it's already at 981. So the market's already quite a bit above this price, right? With only an hour to go. So that's why it's priced a lot closer to 100, because the statement's already true, and it's already true by quite a few pips. It's a pretty good probability that market's going to expire above. So it's priced higher because there's only an hour to go, right? Well, same thing here. This says it has to be above 975. It's at 981. Okay, well, but there's a lot of time to go still. A lot can happen in 20 hours compared to what can happen in 1 hour, right? So it's priced a lot lower. Do you guys see that difference there? So when you have shorter term expirations, the closer you are to expiration, the quicker the value has to go from 0 to 100. Does that make sense? So the closer you get to expiration, normally the higher price you're going to pay for an in-the-money binary. Okay? The more you're going to have to put up to get in that. Does that make sense? The closer you get to expiration, the quicker it's going to get to 0 or 100. Okay? Now, so that's very important to understand. And in fact, let's just look at, let's pull over the demo platform right now. Let's look at a couple live type examples. Let's put, okay, well, what do we have right here? Let's take a look here. Let's look at, yeah, Ralph, exactly. All this is, it's a binary option. It's just like an option. Time is a factor. The quicker you get to expiration, you know, the quicker your Greeks are going to come into place as well. You know, your deltas and it's all about, you know, for those of you who don't understand, it's all about time until expiration, okay, and how much time you have, and it's always going to move quicker the less time you have. Let's pull up the euro dollar. Let's look at 3 p.m. Okay, and what do we have today? Let me just take a look here. So if we go euro dollar, let's find a strike that, let's see here, 09, 20, let's see. Just trying to compare a couple here. Give me just a second, because I want you to be able to see this kind of live as well. 0926. Okay. Let's look at some that expire, let's say tonight at, let's see here, 0920, 22. Actually, you know what? No, let's do this a little different. Let's go over here. Let me just show you this as an example, because I have a chart of this up, and in case we need to look at the chart. So let's look at the Dow, okay? Let's look at the Dow right now. What do we have that expires at, oh, I'm looking at spreads. We need binaries. Let's look at the Dow for 2 o'clock. All right, so let's see here. We've got, Oh, 950. All right, let's take a look at 975. Okay, so this strike right here, 0975. Where is the market at right now? This binary says that the market will expire above 0975, right? But where is the market? 0943. The market's way below there, right? Everybody see that? Because the contract says it'll expire above 975, but it's down at 943. So what's the probability of that happening, of the market moving up above 9, just from a pricing standpoint? The probability of the market moving above 975 in the next 24 minutes. It's a lower probability. So what is the price of this binary? I can buy it for $4.75, right? Because we have very little time to expiration, and the probability of that happening compared to what the market is doing right now is very low. So that's why I can buy it so cheap. Does everybody understand that? Does everybody see why this is priced so cheap? Because the contract says it's got to be above 975. The market right now is only 944. Does everybody get that? We only got 23 minutes. Everybody sees it, right? Okay. Now, what about the weeklies? Where's the same strike? 975. Wait a minute. I could buy a 975 strike for $4, but on the weekly, it's going to cost me $46. That doesn't make any sense. That's a huge difference. Does everybody see that? Let me do this differently here. 975 tear off ticket. Okay. And 2 p.m. 975 tear off ticket. You see them side by side. Does everybody see that? 2975, 2975. The same strike on the same exact instrument. Look at the difference in price. $4 and $46. Have any of you ever looked at that before? Or any of you ever not looked at that before? Or not realized this? What's the difference? It's the same instrument, Wall Street 30. It's the same strike, but look at the difference in price. What is the difference? It's time, Frank, exactly. It's simply time. Okay, because the weekly, because the weekly, and if you go back and watch some of those other webinars, I talked a lot about how, not taking into account charts and indicators and trends, just from a probability of pricing factor. Price is based on probability. So what is the probability? Well, the Wall Street 30 will be greater than 20,975 in 21 minutes. So it'll be greater than 975 in 21 minutes. It's at 946. That's a pretty good ways for the market to move in 20 minutes, right? The probability of that happening from a probability price standpoint is very low. But this is the Dow. How many times does the Dow move 100 points in a day? All time, right? Now, is the probability of it moving from 48 to 75 in 20 minutes, is that real high? No. But how often can the Dow move 100 points in a day? A lot, right? Everybody knows that, right? It can move more than that. So when I've got 4 days, a lot can happen in 4 days, right? So my pricing is going to be a little bit different when I've got 4 days for it to move that much. Does that make sense? Now, let's look at something else here. What about, okay, any questions on this part right here? Yes, Frank. Yep. Yep, they're the same. Any questions on this? Does everybody understand these two tickets I have in front of me here? Does everybody understand? Because this is very important. That's what this webinar and next week webinar is going to be about. Does everybody understand what I'm showing you here? The same exact strike on the same exact instrument, but huge difference in prices. Does everybody understand why? Okay. Okay, and again, if you're a veteran, you understand this, but if you're a little newer, you may have never understood time decay and the difference of expirations, all right? But if you can see that now, it might open up a whole other world of, oh, wait a minute. Okay, gotcha, all right? Arnold says, is there an in-the-money strike available under every expiration that will move one for one based on the underlying? Arnold, no, binaries don't work that way. Arnold, binaries don't move one-to-one with the underlying. If you're wanting to, they're an option, and they're completely a derivative just based on 0 or 100 at expiration. If you're looking for something that's going to move more like one-to-one with the underlying, like if you're looking for something to mimic the underlying market, you want to look at Nadex spreads, okay? Nadex spreads are what you would use to more mimic the movement of the actual underlying, not binaries, okay? Okay, so everybody gets that. All right, and the same would be true if we were looking at, you know, 20-minute binaries compared to hourly, or hourly binaries compared to end of day. Does that make sense? The closer you are to expiration, the quicker it's got to move towards 0 or 100. Make sense? Okay. Let's see here. Sharon says, does it work to use weekly or daily and set take profit targets rather than using 2 hours? Well, Sharon, you could use either one. Okay, you can use our intraday 2 hour, dailies, or weeklies, and you know, based on you're talking like what I talked about over the last couple of weeks about expected movements of the market, Sharon. And if you're expecting the market to move a certain amount, you can use the strike ladder to estimate what the price would be and set targets there. Yes, absolutely. And Sharon, you just totally set me up for my next little thing we're going to talk about here. So thank you very much. So let's talk about that, okay? Or let me see, it might be in the next section, but let me just take a look here. Let me just go back to our slide. Okay, so everybody understands what I was showing you there, okay? So real quick run through, and then we're going to jump into what Sharon was setting me up for here. So today we're talking a little more about short term. And then next time we're going to talk a little bit more about long term, but I'm going to show you a couple quick things here. So why would you want to use shorter term binaries? 5-minute binaries, 20-minute binaries, intraday binaries. All right, let me show you an extreme example, okay? Let me show you a very extreme example. Let's look, because you really got to get this. Let's look at 5-minute binaries on let me refresh this. Let's look at 5-minute binaries here real quick on, let's say, euro dollar. Okay. We don't have much time left on these, but I want to show you here, and I don't want to just sit here and watch something for 5 minutes, but I want to show you something real quick here, okay? Because we can look, like if we look here at forex binaries that expire at, like you really got to get this, at 3 o'clock, let's say, okay? What is the strike ladder difference here? 30, 34, 38, 4 ticks wide, right? So, quick question. If I were to buy this binary right here for $22 or all right, if I were to buy this one right here and the market moved up 4 ticks, okay? If I bought it for 25, it went up 4 ticks, I could sell it for what? About 40 bucks, right? Okay, what about this one? I bought it for 16, the market moves up 4 ticks, I can sell it for what? 23, like $7 more. So the market would have to move up a whole strike or two there for me to buy for 16 and, you know, get it for and sell it for 23 or for 41 or so on, right? Okay. Let's look at the weeklies. If I was to buy this for 19, remember these are 50 pips wide. If I was to buy this for 19, the market moved 50 pips, I could sell it for 24. Make like $5, right? Everybody see that? 50 ticks, I'd make $5 on that particular one, right? All right, let's jump to 5-minute binaries. These binaries right now that I'm showing you expire in 3 minutes. So if I was to buy this one for 12 bucks, 11 bucks, and it moved 2 pips, I could sell it for how much? 18. Wow, that's a big difference, right? Just watch these. Remember this was at 30 a minute ago, now it's at 38, 29. Watch how these move. Because look, down here you've got 10 bucks, down here you've got 99. Imagine 0 up here and imagine 100 down here. What I want you to look at is these 2 middle ones, the 28 and the 77, okay? And watch how the prices move closer to 100 or closer to 0 very, very quickly, okay? Because watch as time goes down, all right? The closer you have to expiration, the more volatility. Yeah, you're trading volatility is what you're doing, okay? And you know, the prices move extremely fast. Let me just, I want to see something real quick here. Let me look at pound dollar real quick, and we'll come back to that. Okay, watch these here. Again, 2 minutes. See this 21 and 63, 20 and 64. Let's watch and see what happens to those here over the next just little bit of time here. Also notice the big difference, 18 to 55. That's a big, 15 and 55. That's a big difference, right? Of just one strike, the big difference of how much you can make. You see that? Okay. Frank, on these, you got 20 and 20. You got 20 contracts available over here and 20 contracts available to buy, 20 to sell. Okay, and that's what the bid and offer size is. Okay. And watch, the closer we're getting here, the quicker these are going to get towards 0 and 100. Okay, boom, see that? Bam, went down to 10 real quick. 6, you see that? This one's moving up. Okay, you see the difference of how they have to move there? Now, what if the market moved 2 ticks up right now? What would be the difference from $6 to $82 in just 2 ticks? See that? 41 and 39. We've only got a minute left to expiration. If the market went up 2 ticks, look at the difference in value that 2 ticks would make. $6 compared to 86. Or if I was to buy this right now for $6.75 and the market went up 2 ticks, what could I sell it for? 80. I can make $70 super quick, right? And as I said that, okay, now looks like some of these are, looks like you've got, okay, boom. Some of those now on this demo account are people putting in orders, you know, throwing out different orders. But you see how quick that difference was? Yeah, what was it, Frank? I could have bought it for 6 and sold it for 73, right? Just 2 ticks difference very quickly because expiration's coming up soon, right? Everybody see that difference of just one strike? But now let's go to the weeklies. What's the 4 days left to expiration? I want to buy this one for $18. One strike move is only 23. It's only $5 difference. And instead of 2 ticks wide, 50 ticks. See the difference? That's another thing you have to look at when you look at the difference between short-term and long-term. Not only does your price move a lot quicker when you only have a little bit of time to expiration, but you'll also notice, okay, this is very important. Like a lot of you are going to be like, oh, wow, light bulb, duh. And it was right in front of you, but you just didn't catch it. 5-minute binaries. How wide are they? Between these strikes, how wide? Make sure class is paying attention. Somebody tell me. How wide are these strikes? 2 pips on 5-minute binaries. Okay? Got it. So what are we looking at right here? Euro dollar. 2 ticks wide on 5-minute binaries. What about hourly or the intraday? How wide are these? 4 ticks. So 5-minute binaries, only 2 ticks. Oh, wait a minute. Hourly are 4 ticks. There's a difference there, right? So not only is there a difference in only having every 5 minutes till expiration going to affect your value and affect your quickness of 0 to 100, but also you've got wider strikes on your hourlies. You see that? 2 ticks on the 5 minutes and 4 ticks on the hourly. Now, so 4 ticks on hourly. What about the daily? All these different dailies in here. Like what about the dailies that expire at 7 p.m. tonight? Or any of these dailies? How wide are these strikes? These are 20 ticks. They're 20 ticks wide. Okay, so we go from 2 on the 5 minutes, 4 on the hourly, 20 ticks wide on the dailies, and then what about the weeklies? 50 ticks wide difference in strikes. Everybody see that? So that's part of the environment of short-term and long-term binaries, is your shorter terms, and that makes sense, right? Because in the short-term aspect, meaning in the next 5 minutes, we don't always expect hundreds of pips move in the next 5 minutes, do we? So binary strikes are 2 ticks apart, 2 pips apart. Over the next hour, could be a little more, so they're 4 ticks apart for you to choose from. Now the dailies could have a little more room between now and the next however many hours, so let's do them 20 ticks apart, give you some different room. A lot can happen in the forex market in 4 days though, right? So they're 50 ticks apart. Okay, so when you're looking at shorter terms, you've got much closer strikes. When you're looking at longer term, you've got bigger strikes that spread, you know, a much wider area of the market because a lot can happen. So, and that's done on purpose to give you more options, right? Because what if the weeklies were only 4 ticks apart? Well, you wouldn't have a very big room here, would you? The market could move up and just blow past all those strikes, right? It's giving you a lot more options. Okay, does that make sense? So now, when we look at, okay, if I were to look at the hourlies, if I was to buy this one for about 20 bucks, for about 18 bucks, and the market moves 1 strike in my favor, I can sell it for 28. I can make about 10 bucks. But on the weekly, if I bought this one for about 20 bucks and the market moved in my favor 1 strike, I'd only make like $3. I don't like that. Well, but also, so you see that, the difference of one strike, but you're also looking at 50 pips move instead of just 4 pips move. So you have to keep that in mind. Does that make sense? Did I confuse anybody there, or did I open your eyes a little bit of, oh, I never thought about it like that. I never realized those shorter terms are closer strikes and the longer terms are bigger strikes. Okay, I see that. And that's done on purpose to be in your favor, to give you options. So, in a nutshell, does it make a little more sense now to where if I'm going to be trading short term, okay, I really need to be looking at a shorter term chart, a tick chart or a 5-minute chart, okay, right? I need to see where's the market going now. What's the immediate direction of the market? Because I've got a very short time to expiration and I've got much closer strikes, right? So I need to have a strategy or system that's short-term, immediate. But let's say I'm not that type of trader. I don't like that. I like longer-term trading. I want to look at a daily chart or an hourly chart. I want to see the longer term direction of the market. Give myself a few days to be right. Give myself multiple hours to be right and sit through pullbacks of the market. Well, at that point, I might really like daily or weekly binaries, right? But let's say I'm that type of trader. Let's say I'm a longer term trader and I want to use the dailies or the weeklies, and I want to look at daily charts, and then I want to pull up and also look at hourly charts and look at longer term direction. Okay, well, good. I'm glad I'm using a weekly binary, giving myself time to be right. I like that, right? But if I am a longer term trader like that, what is my goal? Am I looking to, be right in the long run, or am I looking what I mean by that is, I'm a different type of trader. Let's say that right now I'm a short-term trader and I expect in the next hour for the market to move 15 ticks, 12 ticks. Okay, so I want to buy this binary for $20. How wide are these strikes? 4, right? So I want to buy this for $20, and I'm expecting the market to move up about 12 ticks, which means technically if I go 1, 2, 3 strikes down, I could buy this for 20 and sell it for 76, right? I'm looking to get in and out of the market, right? Okay. Sharon, I think you were asking about this, about setting targets, right? So if I'm expecting a quick move of the market over the next hour, just say about 12 ticks, I know I can buy this for 20 and then maybe get out of it when it's at $70. Get in and out of the market, right? Okay. But if I were to get a weekly for $20 and the market goes up 12 ticks, am I going to really make anything on that weekly? Is that weekly that's so far out to expiration, is quick movement of the market going to give me a lot of value right now? Not really right now, right? It'll start to move faster the closer it gets to expiration, but I'm looking to use these longer term more to be long term right. I'm not looking at them. Because look, if I was to buy this one for about $20, the market has to move 50 pips just for me to make $4. Has to move 100 pips for me to make about 20. Does that make sense? So I'm not looking to utilize long-term binaries to get value move of quick moves in the market. I'm looking at those for long-term moves and giving myself just more time to be right, to let the market kind of mosey down that way or continue that trend. Okay, does that make sense? Does everybody understand where I'm kind of going with that? You want to give yourself enough time to be right, but you want to make sure of what is your strategy or system. If your strategy is to take advantage of immediate moves in the market and get into something for 20, 30, 40 bucks, get out of it at 60, 70, 80, okay? Right, yeah, I mean, they're in a nutshell. Cheryl said, so don't trade short-term. Oh, wait, so don't trade short-term, trade long. No, I'm not saying don't trade short-term. Yes, don't short-term trade long-term binaries, right. Don't use short-term binaries on a long-term trading system. And don't use long-term binaries on a short-term trading system. And I've seen a lot of people use the wrong binaries for the wrong system. Okay? All right, does that make sense? So you have to understand not only to choose the right strike, but to choose the right expiration for your strategy. Okay? So, guys, that was kind of part one. We're going to get in a little deeper and go over a few more things here in part two and talk a little bit more about the difference of short-term versus long-term on next week's webinar. Okay, so I hope this kind of helps kind of set the foundation. We'll build upon it a little bit more next week and look at some different examples of the short-term and long-term and talk a little bit about some premium collection and about the different strategies and some do's and don'ts and so on. So thank you very much for your time today. I appreciate everybody being with us. I'm going to go ahead and stop our recording now.